here. Oh yeah, Andy, we're gonna record. I hope that's okay.
Yeah. Of course, I got my makeup on. It's cool.
Yes, my name is Joe. I'm one of the community managers here at Hoke, and we're an investment club coming together to back ambitious founders who are building for Africa and the diaspora. Been around for nearly 3 years now. 3 years in April. Okay, wow. And yeah, I think together we've backed just over 80 startups, deployed about 2.5 million, and we plan to continue to do that. One of the things that we really want to get done this year is education. And for folks who are getting started, we want to make sure that they know how to do this angel investing. It's not very straightforward. There isn't a lot about it out there. And Andy's doing a great job to write about angel investing and also teaching about angel investing at the Angel Investing School. I remember when we spoke recently, and Andy was like, I was one of the very first people who wanted to join the school just before the pandemic started. And I've been following Andy since we met recently in person, but I didn't feel like it was the first time we met because we've been speaking for so long. And I'm super excited to have you here today to talk about how to develop your investment thesis. Andy, please take it away.
Thank you. Look, I'm super excited to be here because all of you on this call have taken action already. You've taken the first step. You've committed to joining Hoke Club. You've committed to learning more about angel investing. You've committed to investing back into your community. You've committed to investing back into your homeland. So you've all taken the first step. So that's already a good thing. And the fact that Hoke has been going for 3 years, and I get the annual reports, so I see the growth year on year is very impressive. So you've got momentum, which is great because that's all you're going to build up more and more. And when I go through the education in this session today, it's not a private education that you keep to yourself. This is the type of education you share. You share it with others, encourage others, influence others to come along and learn more about Hoke, to come and join Hoke Club, to invest alongside you and let them know it's not as scary as they think, right? So you are the best marketers for this. You are the best advocates. So feel empowered to take this knowledge and share it with others as well, okay? So what I'm going to do over this next hour is I'm going to share my screen. I'm going to go through a presentation all about crafting your personal investment thesis. But I encourage you throughout to ask your questions. Joe's going to help me out with the chat. He's going to help me out if your hands are up. He's going to help me out if you have questions. Please ask your questions throughout. I promise you there's no stupid questions. Joe's asked all of them already. This is a judgment-free zone. No one's going to judge you. So feel free to ask your questions. This is a safe space. Even though it's being recorded, this is not going on YouTube. This is not going on Instagram. This is going privately to the whole community for educational purposes. So please do feel encouraged to feel safe at home, kick back, and just ask the questions that are on your mind as we go through today's content, okay? So I'm going to be focusing on the investment thesis. So I suspect the majority of questions will be on that, but I know there may be broader questions that are asked. I'm comfortable with it, okay? So I'm going to share my screen and I'm going to get started. All right, and I just need someone to unmute just to confirm that you can see my screen. All right, I hear that beep, so I think that's a yes. All right.
That's a yes.
Awesome. All right, so the high-level agenda today is pretty simple, okay? We're going to go through a bit of context and background. We're going to spend the majority of time going through what a thesis is, an investment thesis. And then at the end, I'm going to share a really useful template, a little gift for you all to create your own investment thesis. And we can start to do that on this call today. So you actually leave with some practical value that you can act on after this session ends. Okay. So who am I? So my name is Andy Yim. I've been working in and around startups for the last 15 years. I started my career starting a startup called Mixtape Madness with my brother and a few friends. And my brother still runs that business today. We didn't take angel or VC funding because at the time we didn't even know what it is, right? It was a challenge for many entrepreneurs from our backgrounds, not having access to the network. And then I went into management consulting, which took me across Hong Kong, Shenzhen, and South Africa before moving to San Francisco. And then I came back to the UK and built my career in product management, working first at World First, then for a number of other fintechs and pharmaceutical clients, before leaving to join a VC firm called Backstage Capital, which was all around investing into underrepresented founders, people of color, women. And then finally today I run the Angel Investing School, which invests in people like you to empower you, equip you, and educate you so that you can go off and invest into startups too. So I love serving the Black community, the African community is close to my heart and matters to me. Okay. I'm also an atomical angel, which means that I'm part of an angel program, also known as a scout program, which gives me money every year to also invest into startups as well. And I'm in the process actually of setting up an angel co-fund for the angel investing school so I can make more direct investments alongside my community of angels. And we have about 300 in our community to date. Okay. So I'm going to go through my thesis a little bit later, so I'm not going to touch too much of my portfolio, but highlights here is that 80% of my investments are direct to consumer, or you can call it B2C, which are businesses that are serving consumers directly. And then 80% are also led by either people of color or female. So I take great pride in ensuring that I'm casting the net wide and looking in underlooked places for great founders with potential. Okay. So typically, people think that we're going to dive straight into talking about thesis, but it's not the right place to start, okay? We need to start not with the thesis, but instead with ourselves. Because when we talk about angel investing, we're talking about investing. If we're talking about investing, we're actually talking about personal finance, okay? So your thesis is unique to your personal makeup, and that depends on your personal situation. Okay, so take this or what you're going to learn today and think about how it applies to you personally before mapping to how it fits in with the thesis that you're investing in as a community at Hulk. Okay, so this is it starts with your raison d'etre, which is your reason for being, which is your why. It's your primary core motivation and driver behind doing what you do. It's important to reflect on that first before making a single investment. You don't start with your thesis, you start with your primary motivation, okay? Investors don't just have money, no, they add value beyond the capital. And the reason they do that is because they have a reason behind why they invest, which dictates what they invest in, okay? So I want some of you in the chat actually to start sharing your reasons. What's the reasons why you're investing? What's the reasons why you're motivated to angel invest? What's the reasons that you're willing to go on these journeys with these incredible, ambitious entrepreneurs? Just start putting it into the chat. Start sharing some of the motivations as to why you're angel investing. It is no wrong answers because, as I said before, it's all about your personal ambitions, personal finance, okay? I can't actually see the chat. So Joe, hopefully you can see some of what people are contributing and putting into the chat, okay? So share some of your personal reasons for why you angel invest.
So we have one, which is to grow the economy.
Grow the economy. Excellent. You want to contribute to growing the economy in a country or nation that you care about. Excellent. Anyone else?
My own is to the ability to support founders in the sectors I understand. And then when I believe in the company's product, that's from Jean-Paul.
Excellent. 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 And one of the reasons that I invest is because I love going on these journeys of fascinating people where I can learn as they build their businesses. I think it's a very unique opportunity and a very incredible network that you can get into when you're backing incredible founders. Okay. So thank you for sharing some of those reasons. I'm going to share some more motivations behind typically why angels get started with investing. For some people, it's fun and exciting, right? Like, you know, above and beyond your day job, you may not have a side hustle. You may not have an entrepreneurial idea yourself, but you find it fun and exciting to be learning from entrepreneurs as they build their businesses, to have the opportunity to support them as they build their businesses, right? So that might be one of the reasons why. Another reason could be linked to your purpose. You may have a deep-rooted purpose and love for the African continent or for Nigeria or for Ghana, and it matters to you to contribute back to that country maybe that you originate from. And purpose is such a powerful motivator in life to get you to act on how you feel. Another reason may be because you're paying to learn. You may be learning about a new industry that fascinates you, like Web3, blockchain, or NFT. You may be learning about something that actually enhances your job opportunities because you become an expert or subject matter expert within a certain domain, and you're actually even investing in that domain, which makes you more credible and a subject matter expert internally in the companies that you work in, okay? So you may be paying to learn. And the reason that's an important one is because You know, we often pay to learn, but we frame it differently. When we go to a school, some of us are willing to pay $15,000 for an MBA. But actually, investing into startups provides you with a similar opportunity. You get to invest in potentially big brand startups. You get to build an incredible network like you would on an MBA program. And it could open doors to opportunities through that network as well. Not only the startups, but also the investors that you meet. So again, it is very similar actually to investing in your education and an MBA program. It's just reframing it slightly differently because you're actively learning by participating in these deals. Then also, it may be because you want to meet fascinating people. That's what I mentioned before as one of the reasons that I do. Some of the investors that I've met are incredible. Some of the founders that I've met are simply incredible. When I think of the likes of Wearing, one of my portfolio companies, they've started a digital wardrobe, all about digitizing your wardrobe and encouraging you to reuse your clothes, repair your clothes, and to resell your clothes. It's a massive secondhand marketplace. And they're trying to fight fast fashion. You know, when everyone buys clothes and dumps it to the skip and contributes negatively to climate change, right? These are people that are passionate, ambitious, and have real deep impact and causes that they want to achieve with the startups that they're creating. But there's something missing from here, right? What's missing from here is one of the motivators, right? I want you to write in the chat. I've missed one of the motivators that could be on the tip of your tongue, which might be at the front of your mind. Money, 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 right? For some people, it's the excitement and the opportunity that you also might make a return on this investment. Now, I have to be pragmatic here, right? I'm not a financial advisor. I'm an educator, but I have to warn you that your money is at risk when you invest into startups. So this is why the investment thesis is really important for you to maintain that discipline on what you invest in and how much you're investing in each deal. And we're going to touch on that a little bit later when we define what a thesis is and we get into the details of how it works, okay? So your motivation is the start of your thesis, like I've mentioned. It's actually that first criteria and filter, if you like, because if I've made it a decision to invest into African startups, like a lot of you have, then actually it filters out a lot of opportunities. I'm not investing in Chinese startups. I'm not investing in Korean startups. I'm not investing in American startups. I'm not investing in UK startups. I'm investing in African startups. So that filter is both helpful for me, helpful for other investors as a signal, and also helpful for the founders as well. And we're going to get right into that once we get into the thesis, okay? So before we get into the weeds of me defining what a thesis is, I want to hear from some of you. What do you think an investment thesis is? All right, feel free to unmute yourself or to write into the chat, and Joe can share it with me. So the question here is, what do you think a thesis is? All right, have any of you come into this session aware of what a thesis is or with preconceived ideas of what a thesis is? And it's okay. There's no right or wrong answers here. I'm just curious to learn what you believe an investment thesis is.
We have an answer, which is it's more like your guiding principle.
Excellent, excellent. It's like you've read my mind. That's a great answer. It's such a great answer. I'm going to actually use that and pen that as part of our definition. Okay. Oh, remember, investing is a process. It's not just a simple, quick transaction like buying groceries from the supermarket. Okay. So one important task as an investor alongside that process of putting money into opportunities is to develop an investment thesis. And that investment thesis actually comes at the start of your investment process. So if you think about it at a high level, you may have an investment thesis, which leads you to then screen certain pitch decks, which leads you to then do deeper due diligence around startups that you want to invest in, which then leads you to then invest into those startups, which then leads you to start adding value post-transaction to those startups, right? So that's a high-level investing process. And the thesis is the basis and foundation at the start of that process, but also plays a part in dictating how you do due diligence. It dictates how you screen deals, like some of you did on Tuesday's session, right? So your thesis actually is a golden thread through that whole process, right? And then even when post-transaction, after you invest into founders, they're going to bear your thesis in mind when thinking about making introductions to other founders that you may be able to invest in as well. So an investment thesis, put simply in a single line, is a set of guiding principles, just like that person mentioned, to help you make informed investment decisions, right? And the reason that I've got here a picture of your heart and your head is because often when we're led with our heart, we're passionate about our deal, and we're not thinking logically around our brain and our head around making an informed decision and really considering a criteria for investing into a deal. So we really need a bit of both. It's great to be passionate and interested in a certain market, a certain industry, a certain geography, but we also need to be pragmatic around what are the checks and balances that we're going to be taking into consideration when making that investment decision. Okay. A quick question to everyone, like, why should we write a thesis? Why should we go through the process of actually writing down a thesis? Any ideas?
Maybe to help us stay on track and not divert from what we believe in.
Right. So to help you stay on track, right, and stay on track with what you believe in. It's very similar to actually a company, right? When you're in a company writes a strategy. And in that strategy, they're talking about how they're going to achieve their bigger vision. And the reason that they look at their strategy every quarter or every 6 months is because they want to ensure that they're staying on track with that strategy. It's not so rigid as to say that you cannot move. No, there's space within your strategy, but you're aware of where the boundaries are around what you can do and why. All right? And the investment thesis serves us in the same way.
We have a couple of more answers. So
yes.
One helps. The first one is it helps keep the balance. Then the second one is it could help to form your thought foundation.
Excellent. So what I'm hearing here is that I should actually recruit some of you to come and do this for me because you're so aware of what this is, which is excellent. It's excellent. You're starting from a good basis. So here are some of the other reasons why you may want to write a thesis. It's actually a personal playbook for you. It's a roadmap for how you're investing. Okay. If you choose to publicize it or to share it with founders, it's actually helpful so that they can figure out whether you're a good fit or not. An example is you may say that you write check sizes of $10,000, and that might be too small for the startup and their funding round. So actually they decide that you're not a good fit for them, which is okay for you, which is okay for them. You made a decision quickly. They made a decision quickly. It imposes a discipline on your investment selection, similar to what Joe shared before. It gives you that concentration. And when you haven't got too much capital to put at risk, actually it's really helpful for you to be thoughtful around your selections, right? Like what you're investing in. It enables investors who are aware of your thesis to refer the right types of deals to you, right? So in the UK, for example, a lot of people are aware that I invest into direct-to-consumer companies. So a lot of the deal flow that they refer to me are high-performing direct-to-consumer companies. That's often actually a really high-quality source of deal flow, other investors and other founders, okay? It also provides a filter for you to say no quickly to deals. So if I get a deal with a startup in India, I can say no very quickly because it doesn't align with my investment thesis, right? Depending on you and how you create your thesis, it allows you to share and to reflect on your interests, your expertise, and how much you're going to invest, okay? And it's the basis for building a strong, concentrated portfolio. Yeah, we're going to get into that conversation in a second, actually, around concentrated portfolios that are thesis driven versus more generic investing and spreading the net wide and building a large portfolio, which some larger VCs do. And there's no right or wrong answer there, okay? But the most important thing to take away from this slide is that your investment thesis is fluid. It's not static. It's not once and done. Once I give you this template and you write it out, it doesn't then just live on your shelf and you can never edit and amend it in the future. No. You write your thesis in pencil and not ink, which means that it's there for you to rub out and iterate on and improve over time. Because as you start building your investment muscle and improving how you think around doing deals, you start to build a picture of what your portfolio is, and you start to evolve your thinking around what your thesis is, and that is okay, all right? So VCs usually fall into two camps typically. They're either thesis driven, and an example is Cornerstone Partners here in the UK. They're a £20 million VC fund. Given the size of the funds, that actually dictates their fund strategy, which is point one at the bottom. because it's a £20 million fund and it can do tickets of up to $250,000 and pounds, really they're going to have a small concentrated portfolio betting on the best companies they can find that fit in within the sectors they're interested in, whether it's health tech, fintech, and e-commerce, for example. There's some investors such as Tiger Capital who build as large a portfolio as possible, right? These are the funds that are $500 million funds, $800 million funds, $1 billion funds, right? They're almost acting like a sort of index across the market because they're investing in so many deals across the market at the later stage and following in on those deals. And we call those coverage-driven investors. Some of them will say they have a thesis, but you look into their portfolios, they've done hundreds of deals across over 10 different sectors sometimes, right? The three things at the bottom are really important for you to take heed, though. Ultimately, your fund size when you're a VC investor dictates your fund strategy. And I'm not telling you that because you have aspirations to become VC investors. I'm telling you that because it's important to understand the context of the VCs that are there, that are likely going to provide further funding to the startups that you're investing in. You need to understand their perspective and the economics of how a VC fund works. There's another workshop that I do actually on that topic, so we're not going to get too deep into that today. Secondly, there's plenty of successful examples from both ends of the spectrum. So I'm not here saying that one is better than the other. I'm here saying that as an angel investor, it makes more logical sense when you're invested on a budget, you don't have unlimited capital to start off thesis driven, right? But for VC investors, there's both strategies and both have proven to be successful over time. Just depends on their strategy that they choose. And then thirdly, and the most important point, is that angel investors are not VCs, okay? So let's look at some VCs. A famous thesis-driven investor who publicizes blogs on each of their thesis is Union Square Ventures, also known as USV, based out in New York. And they invest between seed to Series A. And their ticket sizes range between 5 million to 50 million. So they can follow you from the early stage to later stage investments, okay? And their first thesis, USV 1.0, all right, which can be seen on the source at the bottom, but I can share it later on as well. In their first thesis, they believed in network effects. They were investing in network effects businesses, and they invested in the likes of Twitter, right? In that first fund. So you can see how their thesis led them to invest into great companies because they were diligent and disciplined in sticking to that thesis. But then they published thesis 2, and now they've published thesis 3, and now they've published a climate change thesis. So you can see how their thesis has evolved over time, and that's okay. And by publishing their thesis, they've attracted deal flow that aligns with that thesis as a consequence, okay? If we look at Ada Ventures, who invest from seed to Series A, they're now on their second fund. Their first fund was a seed fund, and they invested up. They raised a fund of $20 million, and their ticket sizes were smaller, of 50K up to 250K, and they were investing in just the UK into overlooked markets. Before that, they actually had an angel syndicate, and their ticket sizes were even smaller back then. They were investing between $10,000 to $50,000 pounds into UK-based companies, right? But now they're on to Fund 2. They've broadened out their ticket sizes, and they've broadened out the themes at which they invest in. So now they invest across climate change, economic empowerment, healthcare, and aging. So again, over time, their thesis has evolved. So when we look at the difference between VCs and angels, right, that was my third point on the slide here, right? The angels are not VCs. Here are a few of the key differences. A VC fund raises money as a financial institution and a money manager from other organizations, also known as limited partners. These kind of other organizations include pension funds, endowment funds, sovereign wealth funds, and family offices. Okay, and they're investing in this VC fund in the hope that this fund will return their capital in 7 to 10 years or whatever the life cycle of that fund is. Okay, and the way it usually works is what we call a 2 and 20 model, which means the VC fund, as general partners, will take 2% of the profits every year to run the operations of the fund. Okay, and they'll take 20% of the profits once there's been exits at the end of the fund to themselves and return 80% of the profits to the limited partners who invested in them. Okay, that's typically how it works. With angel investors, the source of funds come from you, yourself, and I. Okay, it's from your savings. If you're lucky enough, it's from your inheritance. If you're fortunate enough, it's from your earnings. If you have carry, for example, or bonus structure in your workplace. In terms of accessibility, VCs market themselves through websites. Andreessen Horowitz, Bessemer Ventures, Index Ventures, Sequoia Ventures, they all have websites. Some of them do a lot of them do content, right? Like First Mark Capital, like they're gonna have blogs, podcasts, they speak at events. They're really trying to market themselves so they can attract the deal flow. Angel investors don't typically work in the same way. The majority of angel investors don't have a blog or a personal website. The majority of angel investors don't say it on their LinkedIn that they're angel investors. So it's a very fragmented market, and it's very difficult for founders to find angel investors. That's one of the advantages and opportunities that angel syndicates have. You do have a website. You are trying to attract founders, and you're in the middle of both a VC and a single angel investor, if you like. Ticket sizes vary depending on the VC. A pre-seed to seed VC is typically investing 100K to 3 million. If I'm being honest, every 5 years it feels like that number is moving up because of the sizes of funding rounds. And angel investors typically invest in as little as £1,000 up to 25,000. This week on LinkedIn, I actually put out a poll, a debate, to say, is equity crowdfunding still classed as angel investing? I'd love to know what your opinion is. If I invest £200 on an equity crowdfunding platform, would you call that angel investing?
And you know, I actually coined, we coined the term saint investing, right? Because not necessarily an angel, but it's a saint who can come in and help you regardless of your amount, right? So like I've struggled with even calling myself an angel investor purely because of personally, I write 1-2K checks. I still invest, but I don't know if that's sufficient to call myself an angel. But I don't think the saints piece will stick. But if you think about the saints, like saints, when they leave on earth, nobody really cares until they leave, and then the work that they've done, stays there, after they've gone. So that's the way I've been thinking about it. Okay, maybe saints, like people might not realize the work that you're doing with your 1K check, but over time and with everything else that you're doing, like your work will be worth more than the 1K you put in. So I don't know. I really want to hear what people's thoughts are on the angel slash.
I think that you should publish content on that because 2 reasons. One, it's good to put points of view out in the marketplace. It builds a better brand for you and attracts better deal flow and attracts investors that want to invest alongside you that agree with that point of view. As well as people asking to speak at events and whatnot. But secondly, it's good to publish that because I think it's a distinct perspective that the world needs to listen to. I like it. I like what you said there. And I think a lot of people have imposter syndrome around, I don't want to call myself an angel. And part of the work I'm trying to do is to reframe what it means to be an angel investor and to modernize it so it's more inclusive of a wider population rather than just rich, wealthy, middle-class white people that are retired and are just playing on a golf course doing deals.
Yeah, no, I hear you. Anybody else has thoughts on do people on the call themselves angel investors? Okay, no thoughts.
Cool. All right, we'll continue. No problem at all. We'll get into those conversations after I stop screen sharing as well. So it'll be another opportunity to share some of your thoughts, okay? The return profile depends, right? And we're not going to get onto that today. But a VC fund is looking for fund returners that can return the funds that is raised, right? I'm happy to dive into that in the questions later. Whereas an angel investor, it depends on your motivation, right? Some of you might want to make a return. Some of you may be happy even if you don't make a return knowing that you've had an impact on something that matters to you, okay? Ownership varies, like I mentioned. VC funds are typically taking between 5 to 20%. Every round actually a startup raises, they're giving away sometimes around 20%, which is important for the founders to understand when they start going through that fundraising journey, because if you get diluted too much, you may not be incentivized to even run your company, right? So it's so important to maintain ownership. and angels are typically taking a more of a minority stake into the deals. And then your value,
Andy,
yeah.
And we have a question. Is there another classification outside VC and angel? Otherwise, I guess you're not a VC, then you're an angel.
Sorry, can you ask that again? Sorry, let me just get that.
Is there another classification outside VC and angel? So I guess if you're not a VC, then you're an angel.
It depends. If you're investing, there's also an impact investor who's investing into typically like charities, non-profits, third sector, those type of businesses. But we're seeing growth in the word impact investing to also include investors into ESGs, which are the environment, society, and government, like the UN sustainable goals. I would also say that there's certain people called grant funders who are basically providing non-dilutable grant funding, which means they're not taking any equity for the money that they're giving you. So philanthropic funding is an example of this from a philanthropy. And then obviously there's lenders, right? Like your typical debt lenders or revenue-based financing, and those different working capital lending models like invoice factoring. But yes, as an individual, if I'm putting money into a company, I'm either investing or I'm giving away that money for free. And the reason I say that you can give away that money for free as a gift is because if you think about crowdfunding websites like Kickstarter, right? Kickstarter is not equity crowdfunding, it's just crowdfunding. I can put money to a cause that I care about who's on that platform. Same as Indiegogo or GoFundMe. I can just give away money. So I think that's the only, thing to consider in terms of the difference. Good question. Okay, I'll continue, but keep those questions coming. So in terms of your angel investment thesis, your personal investment thesis, here I've got some examples of some angel investors, obviously including myself, who invest at the pre-seed and seed stage, okay? So my ticket size is usually between 1,000 to 25,000. And remember, I'm on the Atomical Angel program, actually alongside Samir. So I can leverage their capital to invest into deals alongside my own capital. Samir Singh invests between 10 to 30,000 into deals. And June Angelidis invests between 20 to 50,000 into deals. All angel investors have different ticket sizes, okay? I focus on UK and Europe, as does Samir, but June invests across Africa. That's her focus. We've got an angel co-investment fund that invests across Africa. In terms of the themes, I invest in direct-to-consumer, future of work life, climate change, and economic empowerment. I think I heard a comment there. Is that a question?
No.
Awesome. All right, and then network effect is what Samir invests in. And when he talks about network effect, he's talking about startups who have data at their core, and the more people that use the platform, the more powerful the platform becomes. So a great example of that is, a startup like Twitter. The more people that are on Twitter recommend it to other people, the more tweets that are sent, the more data is in the engine, the more money they can make from advertising. June invests into health tech, fintech, e-commerce, B2B SaaS, and future of work, but again, specifically on the African continent. So these are the high-level investment theses that serve as a filter to determine what deals that we do, okay? So how does your thesis actually map to your portfolio? Here's an example of how my thesis maps to my portfolio. So in terms of direct-to-consumer, I've got Ava Estelle, which is a skincare brand that focuses on skin issues such as eczema and hyperpigmentation for people of color. I've got Ruka Hair, which focuses on hair for people of color. They're both direct-to-consumer startups, probably going to explore B2B options in the future, like retail distribution, okay? We've got future of work life startups. So it's got Definely, which is a legal tech startup for lawyers that helps them basically edit legal documents as easy as using Grammarly, okay, in Word and in Google Docs. I've got Patch, which is a commuter belt town, co-working spaces in commuter belt town. So co-working spaces that live just on the brink of main cities like London, like Manchester, or like, for example, Accra or Lagos, okay? So it would never be in the center of the city, they'll be on the periphery. The reason for that is because, as we've seen in COVID, a lot of more people are working either from home or hybrid. And it's easier if you're trying to have more autonomy of your time to, you know, take your child to school, to work at a co-working space that's in your community, than to commute to work. And then Unplugged is another example, and that's a digital detox cabin experience where they have these cabins in the middle of the woods or camping sites across the UK, and they want you to take a digital detox. So you put away your phone, put away your laptop, stay for 3 days, and one with nature, one with your thoughts. And they're now exploring B2B offerings with big companies as well. In climate change, I've got Wearing, I've got Alexis. Alexis, for example, provides solar panels for B2B companies like IKEA, and then charges some of the energy back into the grid so they can recoup some money for the excess energy that they're not using. And Economic Empowerment looks at startups such as Farmland, which is a marketplace for SME farmers, and it helps them also with procurement and selling of their produce into international markets. Or Yom, which is fintech infrastructure for people that want to provide banking services to the SMEs and freelancers within their communities. Okay, that's a range of different startups, but they all fit within the thesis that I invest in. And over time, this has evolved, right? Because my thesis has grown as I've evolved as an investor. I've done about 15 deals to date. So I just said, share the selection on this slide. Okay. So my gift to you, and I'm going to share this in the chat in a second, is that I've got this investment thesis template that I've created. And I want you to go through it for yourself and to start to fill out actually a draft of what your investment thesis can look like, using this as a guide and a template for creating the first version of your investment thesis. Okay, so I'm going to stop sharing in a second. I just want to share a quote with you quickly. So this is what we covered. We covered the context and the background. We went through what an investment thesis is. I'm going to share this template so you can start drafting your own thesis as we get into conversation and questions. Okay, but I want to leave you with this quote by an angel investor called Ron Conway from SV Angels out in the US. He says, I invest because I love helping entrepreneurs. I think that's a core value that a lot of us share on this call. He also loves watching them grow and succeed, right? He said, learn and succeed. He is driven by his personal motives. That's those same personal motivations that I touched on earlier, as well as his personal values. And that's important when thinking about the chemistry that you have with the founders that you're backing, okay? That's all I have to share in this presentation today. I hope it's been of value to you. I'd love to invite you to show yourselves on camera and to unmute yourselves so we can get into conversation. And while I do that and wait for kind of the first conversations, what I'm going to do is I'm going to share a link to the investment thesis template so that you can start filling out that template, okay? Joe also has a copy of this. So if any of you are not on Google Drive and you can't open this, Joe can also share a Word version with you after the call. Okay, I'm not going to put pressure on him to start fiddling around now. Okay, so you've got a copy of the investment thesis template. As soon as you click it, just click make a copy, save it into your Google Drive, and start filling out that template. Again, try to put yourself on camera if you can. You can put a face to the name. And we want to start going through the thesis as you start to build it so we can have conversation and provide feedback to each other, as well as encourage each other as we draft the first version of our thesis. The other thing that I'm going to drop into the chat is a link to our newsletter at the Angel Investing School, just so that if you're interested in learning more about what we do, learning more about our perspective and our blog posts and our content that we release on Angel Investing, you can connect with us here and you can check out what we do. Okay, so that's enough from me for now. I want to pause for a second and I want to check to make sure that you're able to open the link that I've shared. Can you confirm that you can open the link that I've shared to the investment thesis template? Femi, can you open it? Mo, can you open it? Temi, can you open it? I'm seeing from good. Ade, you can open it. Yao, you can open it. Jean, you can open it. Chioma, you can open it. Yeah, I'm seeing that as confirmation. All right, I'm taking silence as a yes. All right, so start filling out that template. Okay, and in that template, thank you. I'm seeing the thumbs up. Excellent. You're going to see that the first thing they touch on is the investment amount. How much are you interested in investing into deals? Put it into your local currency. Is it between $1,000 and $5,000? Is it $10,000? Is it $2,000? Think about what it is and think in terms of portfolio construction. How much can I invest in a way that's sustainable so that I can do a few deals a year at least, right? And this is where we're talking about your strategy, right? We're not just in the business of just investing once. We're thinking strategically about the portfolio that we're trying to build. The second on the list is really around stage. What stage are you investing? Thank you, Daniel, for confirming that you can open it. It's also in the email. Yes, it's also in the email that I believe Hulk have shared with you earlier. So even if you can't get to it and finish it now, or you can't get to it now, you can open it later. And remember, once you save it in Google Drive, it's automatically saving, okay? So you can keep evolving this and updating this. If you want, over time, save different versions of your templates. You can see the evolving picture of how your thinking is changing over time, rather than overwriting the same version of this template, okay? So you go through your stage, your geography, the sectoral market, the founding team, which is where we spend the majority of time as angels, often evaluating these founding teams, the business models you're interested in, any product or tech things that matter to you, such as IP or deep tech or high repeat usage, and what value can you add? And that last one is actually more about you than the founders. It gives you an opportunity to reflect on your value add. And when you reflect on your value add, I want you to consider your whole lived experience, not just what you do at work. How else can you be helpful? Because it's the little things that are really helpful to founders, all right? And the reason that it's important to list that is because when you get into conversation with founders, you also have to position yourself in a place of strength. And to do that, you need to have been aware of how you can add value to their startups, okay? All right, Joe, I think you've got a question there.
Yeah, not a question, but an observation. When I'm filling my form, I just realized that in terms of geography, I put in Africa diaspora, which is something, it's a geography that we don't really see or it's not tangible. But I realized a lot of companies that we've backed are not, they're building for the diaspora, which is so big. And I just wanted to point that out because it's not something that you see often. And as soon as I wrote it, I'm just like, oh, the African diaspora is, a geography that a lot of companies are building for.
So you're focused on the almost like the customers and what they're building for, rather than just where the company's based. So you're saying that
exactly.
I don't want to be restricted based on where the company's based. I'm actually more focused on the impact the company's having.
Exactly. I was thinking, because I was speaking to a company called Kishi this morning, and while they're based in the UK, they're not serving just UK customers, right? They serve diaspora customers, and they, it's a remittance company, so folks in the US, Canada, the UK sending money to like various parts of the world. So yeah,
that serves as a filter for you to make a decision as to whether you're going to invest or not. So if a company comes to you and says, I'm actually in the UK at the moment and Germany, I want to get into Africa in the future, would you treat that as an investable opportunity or not until they're actually serving Africa? Because
you want to mute there for a second.
Oh, sorry. I was saying, is it an investable opportunity if they're not in Africa today, but they say they've got plans to go into Africa, but you have that risk of knowing that they may not actually go into Africa?
Well, it depends on how they're positioning it, right? If it's something that, is the product fit to market, or do they need to make changes? Is the market size there? For example, if you're trying to sell, I don't know, like a highly customizable investment product or a highly technical investment product for a market like Zambia, I'd be like, oh no, those people don't need that, right? So you have to really make the match. But if the product is ready, that can be sold into the African market, yes, definitely.
Excellent. I think we had a question. Excellent, thank you. I think we had a question from Ade Kitan. Do you still have your question?
Hey, I was gonna ask, could you say, just give me a second. Could you just say you are investing in, you are location agnostic, so far the founders are Black or African founders? Does that make sense?
So sorry, could you rephrase that? So could you say like, investing into Black founders or African founders?
Yes, so you are location agnostic.
You can say that, but remember your thesis is not just that one point. It could also be sectors to help you focus even more. Because if you're sector agnostic and I just invest into Black founders, you're casting the net very wide, and you have to be able to either have the network to be able to do due diligence across deep tech and biotech health tech, and it's not easy to spread yourself so thin. So that's why this thesis is not just one thing, but actually taking into consideration a number of different filters that help you build an overall picture of what you invest in and what you don't. You know, and over time, actually, Ade, I hope you don't mind me calling you Ade. Over time,
Yeah, that's fine.
Over time, when you look at your portfolio, you're going to notice patterns like, oh, I didn't realize, but 50% is actually in fintech. So I'm clearly interested in fintech. I'm a fintech investor. I just didn't know it at the beginning. So my first thoughts were feeding my curiosity and finding out where my curiosity were. And then actually looking back, now I can actually paint a stronger picture around the sectors that I focus on. So you may start off generalist and then get more specific in terms of industries and sectors.
Okay, so I actually made like location agnostic. Like you don't care about the location so far it's a Black founder or an African founder.
Yeah, it's a personal choice. It's a personal
Gotcha.
choice. But there is complexity that comes with investing across borders. You know, tax in the US, or like how do you do a deal in Japan? I don't know. You know, tax incentives if you're doing deals in the UK. So you would have to understand the regulation and the in different jurisdictions.
Got it. Thank you.
Awesome. Is there any other questions? How's it going filling in the template, by the way? Is there any questions around the template? Is there anything challenging or that you don't understand in the template that was given? I tried to make it as simple as possible, but please do share if there's anything that you want clarification on. Okay, that's good. That's good. And I've seen that you've made copies because no one's in my copy at the moment, which is excellent, apart from Joe, I think, which is good. You're not typing in my copy, but I can just see.
No, I'm not typing in your copy.
All right. Is there any questions outside of the template? Is there any questions anyone has? What I would love to do, if possible, is if anyone's finished their template or nearly finished, I'd love for you to share your thesis so that we can hear it and ask any questions or provide some perspective based on what you share. So has anyone finished their template and they would like to share?
I can share. I finished mine.
Sure. Why don't you kick it off, Joe?
Okay. You don't want me to share my screen or anything, right?
No, you can just read it.
All right. So in terms of investment amount, I've got 5K down. Stage, pre-seed, geography, Africa and African diaspora. Sector, fintech, edtech, and software infrastructure. Team, I prefer technical founders. Business model, B2B and B2B2C. Product and tech, I've got scalable software product. And then can I add value? Yes, fundraising and hiring. My views are second-time founders with a solid technical and commercial team.
Excellent, excellent. And it's hard for you to think back, but how do you think that compares to your initial thesis when you first started angel investing?
Oh no, my thesis has very much evolved. I was very scared to do my first deals, purely because I'm like, why would I lose my money? But yeah, I had more reasons to actually invest. Because one thing I found out is you can always find reasons not to invest.
Yeah.
And it's always good to at least try to look for reasons to invest, despite all the risks that come with it. So I was very, a newbie, I was very like, why are we even doing this?
Yeah.
But yeah, I think I've grown since then.
That's awesome. That's great to hear. That's encouraging to hear. All right, we'll go to Daniel and then we'll go to Femi.
Thank you, Andy, for this session. I remember when you started, you mentioned that having an investment thesis goes in line with having an investment mentality as well as like a savings approach. So my question boils down to the first question in the template, which says that how much do you want to invest per deal? So is it also possible that I look at my investment budget from like, for example, I can say in this year, I'm looking at investing about 15K?
Yes. Great question, great framing. And also, it's a really important question because if I know that I'm investing 15K this year and I want to build a portfolio and maybe invest that into you know, 3 to 5 deals at 2 to 3K each, okay, it dictates my strategy a little bit because it says that I need to be investing through an angel syndicate, or I need to be investing through special purpose vehicles so I can pool my money together with others to meet the minimum ticket criteria to invest into a deal. Whereas if you was to say that I want to invest 50K per deal and do 5 deals this year, you have a little bit more optionality. You could probably invest directly into startups as well. So you raise a really valid point, Daniel, around reviewing your own investment budget first and staying disciplined around investing based on that budget and making sure that you don't invest all of your budget into one deal, but rather you spread the risk and the opportunity to also hopefully win by investing into a number of deals with that same budget. Thank you, Daniel. Femi.
Oh, hi. I was going to share, but not ask a question. So if people want to ask questions, I can wait.
No, I'd love for you to share.
Okay, cool. So first question was investment amount, and I've got there 1 to 2,000 with a maximum of 12,000 a year. Pre-seed stage, the geography being UK and Europe. And within UK and Europe, I'm even more specific in that diaspora people focused on diaspora, not diaspora into Africa, because that's not my wheelhouse. I don't really have that much knowledge of the African market. Yeah, go ahead.
I love that phrase that you just said. You just said, I'm going to translate. I'm so aware of my competence, of my knowledge base, self-equity. But what you said is aware of what you know and what you don't know, that you set a sensible boundary to say that I'm not going to invest into Africa because I don't understand it. I don't have access to it. I'm not on the ground there. I'm not close to it, but I am going to invest into the UK and Europe because I know it well. So I love that you set that within your criteria because you're showing that discipline around really playing close to your circle of competence and what you're good at and what you understand. So I love that, Femi. So continue, but I just wanted to pause and just really emphasize and echo that point. It's really good. You can continue, Femi. Sorry about that.
Sorry, I muted myself again. I can't claim credit for that. I'll give Joe credit for that. So I've been a member of Hoke. I think this is my 2nd year running. And generally, if I'm going to do anything Africa-wise, it will be because of the way they sing the praises, not necessarily because of my own knowledge. So I could research all I want, but I don't have the knowledge. And being with Hoke for this is going into my 2nd year kind of made me realize that actually I don't have that knowledge. So yeah. Okay, I'll carry on. Sector is now with a little bit of a star here. Femtech, health tech, cloud, and entertainment, specifically film. So the caveat with the thing is, once I was writing it out, I realized that actually I will not be able to focus on all of these separate things. So I might just choose the 2 that I'm really passionate about. Cloud, because I work in cloud, so I have a background knowledge. Femtech, because I'm a woman and I understand how underrepresented and how much there is. Like, women are really, really loyal to specific products, especially femcare products. You know, like women are still using tampons and Tampax, irrespective of what is out there around what you shouldn't use or what you should use. There are so many things in the women's health kind of vocabulary and dictionary that haven't been sorted out, and that if they have cures for them, people are still using old school remedies and stuff like that. If they can figure those things out, then you know you have a market for life. So that's why I'm really, really interested in femtech. Entertainment, specifically around video and film, I think there's a lot of disconnected people from the diaspora. I'm one of them, who want to know more about back home, or who have a little bit of knowledge but want to know more. But actually, the things that are being produced in Africa are not for diaspora. Like, we get laughed at if we don't understand the language. We get laughed at about different things. And there isn't that connection. So sometimes what you have is you have diaspora people going into Africa and producing travel documentaries or producing films that actually are specifically aimed at people in the diaspora. And I think that's probably a growth market. Team value, I care about values, I care about drive, I care about future thinking and experimentation. I don't care about domain expertise. I think you can hire that in. Business model, it's basically, it could be B2B, B2C, I don't really care. Product, at the end of it, when I look about it, it's really about tech and vision. And where can I add value? It's visioning, network, and researchability. My view around what matters to me is impact, realizing vision, solving a real problem, and creating groundwork for future companies. Yeah. If I were to summarize the thesis in 3 bullets, it's future thinking, solutions to problems that exist, and tech or tech adjacent. That's it. Thank you.
Perfect. Look, if anyone in Hulk wants to learn how to do a thesis, speak to Femi. She's been through it. And it's so interesting, Femi, because you have really strong perspectives over time. You have really strong perspectives that you've developed over time, and you've really put a stake in the ground around your beliefs. It's very clear. Like what you said about film was fascinating. I had someone send me a film deal the other day. I was like, I don't understand it. I can't do it. I had no clue who to send it to. Now I know Femi is someone that I could send a film deal to because you put that signal out in the world to me. You know, another signal that was really interesting is what you said about domain expertise. Like, that's a great thing to create content about, you know? Like, I believe you can hire in great talent. You don't have to have it in-house from day one in the founding team. That's a differentiated perspective. For some people, it's like, I want to see that domain expertise in the founding team, or that will put me off the deal. You know, so it's really interesting that you developed these points of view, and there's no right or wrong until the feedback loop in 5 or 7 years where we find out, actually, you're onto something and look what happened. And the hiring one is really interesting because you probably do actually assess them to understand, like, do they inspire followership? Have they inspired people that you've worked with before to come along with them in this journey? Are they great at hiring great talent? You know, like, those are the things that you might be assessing a bit more stronger because you believe in the ability to hire domain expertise. So your thesis tells so much about you, and we can have such a colorful conversation once, like, someone puts a thesis together, and you can see where there's points of alignment versus points of sometimes divergence from just even seeing and hearing some of the thesis. So thank you for sharing yours. George, we have time for maybe one more at least?
Yes, I mean, it's up to the audience, and it's also up to you. So.
Okay, maybe we can go through one more. Does anyone else want to share the thesis that they put together? Again, for anyone that's come late, there's a link in the chat for creating your own investment thesis. You just make a copy, and then you can create your own thesis and evolve it over time.
Yes, I would like to share my thesis. I think I would like to start from the 3 bullet points, which is like from the bottom up. So my 3 bullet points are: 1, to invest in ESG companies within Africa. Basically because I currently play in that industry, so I think it gives me more leverage and opportunity to be able to see what's happening and to pitch my tent perfectly. Then secondly is that to invest in pre-seed, basically, because I know that a lot of companies within Africa that are building for the ESG sector are still more like in the pre-seed stage. Then the last point is that I have an annual risk appetite, which is to invest max 15K USD. So then I'll move over to my view. I said the origin story, or original story. Can I add value? Yes, because I currently play in that industry. The product, I don't have an answer for that one. Then the next is a business model. I think for a B2C, I will go for a B2C.
Can I just pause you there for a second, Daniel? There's 2 things you said that were really fascinating. One is you clearly understand where you can add value as well, like, because you play within that industry. But I like your risk protection that you've got in terms of limiting how much you're investing every year. Because one of the biggest mistakes that new angels make is that they invest more than they can afford to lose in their first deals. They get too excited, too passionate, and invest more than they should have in that first deal. And it's only after doing 2 or 3 deals do they realize that actually I should have really invested less in those deals. I think the fact that you've got that discipline around this is the money that I can afford to lose and put into these deals. I'm not going to impact maybe my rent money or my living cost or the money that matters for me to live my life. No, this is the amount that I can afford to put aside, reserved for angel investing. And I think that's a really powerful reminder for all of us on this call to just be really disciplined around separating money, almost like having different pockets for how you manage your money, so that there's clear difference in the money that's set aside for doing deals rather than just doing deals out of your main account. So thank you for that, Daniel. Keep on, you can carry on.
Okay, thank you. Next point. Geography, so sector or market, ESG and fintech. Geography, Africa. Stage, proceed, investment amounts, 15K. I'm looking at an annual budget, like we already said above. I think that's all from me.
And Daniel, I know it's not in the template, but are there any no-goes for you in terms of I will not invest in these areas, I will not invest in this type of founder? Because you mentioned origin story, and I think that's really powerful because all of us should be paying attention to the origin stories of founders because it leaves you with clues. Like you can tell when someone's uniquely placed to solve a problem by the origin story that they tell you. You know, do they have a background in that industry? Are they solving their personal pain point or pain point of a family member? They just have this business idea 6 weeks ago and there's no logical background to why they're solving this problem. The origin story is such a powerful filter when getting to know a founder.
Yes, to add to that, back when I was in university, I actually saw someone who died from emission from back in, I live in Nigeria. We have these local generators that produces electricity. I actually saw someone who died from the carbon monoxide that comes out from this generator. Wow. So if any company could bring out the products that could reduce the impact of this gas within Africa space, I think I will definitely go for that.
Wow, that's such a powerful personal story. I'm sorry to hear that actually, but yeah, like that's a deep story, right? That's an origin story that you just shared. Excellent. All right, so look, you've got a template. I see looking at my emails to see if anyone was requesting access, but I think you should all be able to make a copy. So if you struggle with it after, you can always reach out to Joe. The last thing I want to say before I wrap up is, like, look, as I've said before, this is an evolving picture. So don't put pressure on yourself to feel like I have to get it right the first time round. No, treat it like almost like a journal. You want to document over time, and actually, you do want to try and keep a bit of a investment memo or decision journal to really understand the decisions that you're making along this journey. Yeah. So create space, even every month or every quarter, to reflect on the deals that you've seen, including what you said no to. It's interesting when you look over in a few years' time to understand, did you miss out on certain winners that maybe you should have gone into? Or did you learn something from the mistakes of going into deals that perhaps in the future you wouldn't, right? So just pay attention to your journey and create feedback loops so you can continue to reflect, evolve, and get better as an investor over time. Thank you for your time today. I haven't got anything else to add. Obviously, if you want to learn more about myself, the Angel Investing School, you can link to me on LinkedIn. But I see Hulk as a brother or sister community to us. We're going to do more things going forward in the future as well. Really hope you got a lot of value from this session today. So thank you for your time today.
Thank you, Andy. Before, I think we have one hand up. But sure. Do you want to share a bit about your next cohort about the Angel Investing School?
Yeah, sure. So with the Angel Investing School, we kind of have 3 products. We either go into companies like Google to train their Black network. We run an internal version of the school across 5 weeks. Or we have a public cohort-based course that we run every April and September. So we're taking in people for the April cohort now. So you can pay to secure your place. And that runs for 8 weeks, every Wednesday from 6 p.m. to 7:30 p.m. And it covers a range of topics from sourcing and assessing deals to the investment thesis, which is similar to what we've covered today, but a little bit longer, to structuring deals and leveraging SPVs and those platforms, right to even building your personal brand as an angel investor. So there's usually a cohort of 30 to 50 people that go along this journey with you. You really get to know them in the breakout groups. And for those based in London, we also have monthly events where we can actually meet people and get access to our deal flow on the Slack channels as well. And then finally, we have a membership, which is for people that are time poor, essentially, so they can take the course through pre-recorded courses and come to our Q&A community calls every 2 weeks. So thank you for sharing the link there in the chat. But this isn't really a sales call. This is me just adding value to you guys in this community and helping you with the investment thesis. I'm more than happy to come into future sessions and even learn alongside you, because I'm on a journey and we're all on a journey. Joe is also on a journey. So we're always learning and we're continuous learners. And I always say that, you know, the humble teacher is always the student as well. And the student is always a teacher to someone else. All right. So thank you all.
Andy, thank you so much. And